You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/the Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' bit of tunage means it is time to rock out with hopefully your favorite bi-weekly options. If there's another bi-weekly options show that you like better, A, I don't know about it. I don't know if there's another one. And B, we still like you. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Old Network. A lot of you guys hitting us up saying how you're enjoying doing deep dives into the network. We're pleased you're enjoying it. There is a lot there, 12-plus years. Yes, over a decade's worth of content. A lot of great ways for you guys to get that, of course. The website has pretty much everything you need to find. If you can't find something there, let us know. Of course, there's the old app, has everything going back to the dark days as well. Other platforms like your iTunes and Google Podcasts, your mileage is going to kind of vary there depending on their settings and how many episodes they want to show, that sort of thing. So you're probably going to go back only 50 or 100 on some of those. But our shows, we have many shows that go back well beyond that. So that's enough for most shows and most networks. But they haven't met our network. They can't handle the truth. You know who can handle the truth today, holding down the Fidelity hot seat? It's the return of the last emperor. It's kind of ironic. You know, he's the last one, yet he keeps popping up again. Mr. Konstantin VRANDOPULO. Kind of hard to be the last emperor, Konstantin, when you keep showing up.
Well, that's what I do. I keep coming back. It's a pleasure to be back, guys. It seems like it's been a little while. It seems like maybe a week or a week and a half or so. But I'm definitely back and happy to be here. Plenty to talk about today.
There is a lot to talk about today, and also joining us to help us do just that. Well, tell you what. Our other two compadres here running a little bit behind. So let's buy them a little time. Let's roll right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Uncle Mike and the Meatball will be joining us post-haste once they get themselves situated in their various respective offices. You know what else needs to get situated? It is the market today. It's kind of in another one of those, I don't know, kind of modes, kind of shrugging its shoulder. So, and again, it kind of depends where you live, what you're trading, how your outlook is on the day. S&P, once again, the Goldilocks, my porridge, not too hot, not too cold, just kind of right, I guess, if you like a little bit of downside. S&P off about 0.2% today. Dow up about 0.2%. And the NASDAQ saying, look out below, off about 0.6% or so. All that driven by a lot of different factors, including mixed interest coming out of the world of all things tech. We are, of course, still knee-deep in the earnings front. A lot of good stuff to pop off there. We'll get to some of that in a little bit when we get to earnings, news reports, and all the things that are lighting it up over there at Fidelity. Gold and oil taking a little bit of a lift today, but only slightly up, about a handle in gold and about a third of a point out there in WTI. Still in that mid-50s range. Check out TWIFO if you're interested in crude. We did a deep dive with a crude market maker last week, and it's kind of interesting to see what they're thinking about the skew and how just that skew just does not, they do not want crude to really maintain any upside, and they've said it many times. It's kind of like VIX in a way, where anytime there's any upside, it's just an excuse to dump calls and get rid of stuff, and that seems like what we're seeing in WTI for the near future. No one really betting hard on an aggressive move back to 70 anytime soon. Interesting stuff. But let's kick things off in the hot seat. Let's go back out to Fidelity land. Mr. Last Emperor, sir. A lot going on. Even though it's a quiet day in the market, there's a lot going on the earnings front. So what's catching your eye out there in Fidelity land? And what are the Fidelity folks trading on this somewhat quiet day, sir?
Yeah, definitely. I would say that there are a few names that are moving significantly. So let's get into them. I mean, you mentioned, it makes my nickname hard. I guess I have big shoes to fill, so I have to keep coming back and making sure that I'm working at it. So from the Fidelity land, top four names on the buy sells today. Lighten up the board. Beyond Meat. I know that we keep mentioning this name. Today is an interesting day, given the fact that obviously the stock had a massive range. I think the high on the day was around 234 and the low was 201. So $33, $34 range going into earnings. I believe that it's actually reporting today after the close. So, off around 5% of my last look. And Fidelity customers were pretty evenly split, actually, between the buys and sells. I would say that it's given you a little bit of a taste today, I guess, of what could potentially happen. I looked at the straddle price into Friday, and it was pricing in around a $42 move, with today's option activity pretty well off the charts. I think the 90-day average volume was around 118,000 contracts, and it already traded 166,000, and we still got about 3 hours to go in the trading session. So it's given you a little bit of a taste. Obviously, the straddle of $42, 18-19% move expected into Friday. I think on the lows of the day it was down as much as 11%. So we'll have to wait and see what happens, but continues to, humble, I think, a lot of people who tried to short it. Obviously, shorting the stock is close to nearly impossible because you can't find shares. The synthetic short positions are tough to put on because of the massive skew in there, because of the hard-to-borrow rate on the stock. So it has been an interesting stock to pay attention to and to follow, because it's showing us a side of the market that I haven't really, seen before for this extended period of a time. Second one was Amazon. Amazon reported earnings last week on Thursday night. The straddle was pricing around a $70 move, I believe, and it kind of underwhelmed. There was definitely an inside move into Friday. Stock was down around $30. I guess the street wasn't extremely excited about Amazon's spending habits, as they're starting to come back to that. That same mechanic that they used to present in their earnings reports, right? Huge revenue beats, but quite substantial spend. So the stock was down, but it wasn't down nearly as much as the market was pricing in for a one-day move. Today, you get a little bit of a follow-through here, down another $45, so 2.35%. And you know, the options activity, I guess, is relatively benign, normal. On the Fidelity customer front, however, they're definitely leaning to the buy side. So it's 70-30 right now to the buys versus sells. The next one, and I just wanted to mention on Amazon, you know, it's right back down to that $1,900 level. We spent a couple of weeks there in the middle of June. So it will be interesting if it could find any support or any buyers in here. Remember that Amazon, was up tremendously. I think from the lows of mid 1600s all the way up to 2030 or so in a matter of a month. So it's giving some of those gains up for right now. The next one I wanted to mention, and I know everyone is most likely going to be looking at this behemoth reporting earnings, is Apple. Up, bucking the trend today, up a little bit over 1%. I think what I noticed in the news feed there was the fact that it caught an upgrade, or maybe not an upgrade necessarily, a reiterate buy, but an increase in the price target from UBS. And so, back into that 210 range, I find Apple interesting here because just like the rest of the tech sector, it has had a tremendous rally, but it's trading back into the 210, right back to the previous post-earnings high of the 215. And that's where it kind of began its June slide. It went from, 214, 215 all the way down to 170. I find it incredible that companies of this size can move up and down, 25% in a matter of a couple of months. Kind of a crazy roller coaster there for a lot of these big tech names. And obviously, going into the earnings report, it's going to be an interesting one to watch. Will be on my radar. The next one is Roku, and that one I know for a fact I personally mentioned. Roku's down 6.2%. Fidelity customers are leaning to the buy side, though. 66% buys versus 34% sells. I couldn't really find any particular reason, with the exception of the fact that maybe the Barron's article this weekend warning that a lot of the software stocks might be resembling or trading in the bubble. So there are a lot of software names today that are getting hammered. Remember, Roku's up 65% since the last earnings report. I think it reported first week of May. So stock is up 65 for those gains. Still trading relatively close to the all-time high here. Reports on the 7th of August, so next Wednesday. And like I mentioned, Fidelity customers are leaning to the buy side right now, even though it's getting hammered. Probably one of the weaker names, along with some of its peers in the hardware, software, cloud industry today. So that pretty much wraps it up for the top four, guys. I think that we've covered four stocks, and all four have substantial moves. Different market caps, but I guess something for everybody.
Something for everybody, indeed. Speaking of everybody, I think we are finally joined by everybody now. Better late than never, as always. Let's go out to the land that changed the universe, not just America, not just Earth, but the universe indeed. Of course, Riverside. I think that's where he is. Let's find out. We are joined by the Greasy Meatball, Mr. Mark Sebastian. Mr. Meatball, how are you, and what is lighting up your tape today, sir?
I'm great, and I was going to say I don't remember LaSalle Street being listed on the 10 places that changed America, because I'm at our world headquarters as we speak.
Well, if they were listening, it'd be past number one, so it couldn't even be on.
Oh yeah,
it's
exactly.
The ultimate place. I mean, they filmed Dark Knight there, for God's sakes. What more do you need? And Transformers.
They did and Transformers. So I mean, it doesn't get any better than that. Yeah, it's quite the snoozer, I gotta say, and just the lack. This is the meayest day I've ever seen Now there is some trading, and I'll be happy to talk about those in a bit. There's been some decent VIX trading today, but as a whole, it is a bit of a snoozer.
Bit of a snooze fest. Let's see if the same is happening out there in the land of St. Charles, where we are joined appropriately enough by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program to you as well. And what is catching your eye in this kind of weird, day in the market?
Well, I mean, it's always exciting. I mean, the main thing that's catching my eye is the fact that we have different indexes that are one's up, one's down, kind of a unique thing. I don't see that oftentimes, but I think ultimately this is just going to be a wait-and-see market until we see what the Fed has to say on Wednesday. But until then, I think things are kind of a little bit ho-hum for the time being. We might get a few things from the earnings announcements coming up in the next couple days, but I think ultimately in the macro market, we have a big macro announcement, and that's what we're going to be looking at this stage. But in terms of what's catching my eye, just trying to make sure my paint dries.
There you go. Always an important consideration on days like today. And even though Mark kind of alluded to, even though it is a kind of quiet day out there, some products are lighting it up, including the VIX. Coming into Showtime, they had done nearly 300,000 contracts. The ADV also ticking up a bit as well, up to about 456. That's up about 30,000 contracts from our last show. If you listen to Vol Views, you kind of know why. There's you call him 50 Cent, call him the whale, maybe a combo of both. There's also a big fly guy trading out there as well. So a bunch of different players seemed to come back en masse last week. Mark, is it that same player or players out there playing today in VIX? What are you seeing out there?
I was muted. Sorry. We had, we've seen really the two big trades for the day. Customer bought 45,000 of the 18 calls for 48 cents. And then a customer within a minute bought 60,000 of the SEP 24 calls. Last week we saw all kinds of stuff being bought, almost all upside. We saw the SEP quarters being bought for 45 cents, 125,000 times. The 18 calls bought again. So just lots and lots and lots of cheapy upside paper. And, so that's kind of what has been the MO for volatility. Aside from that, there's really not been very much to report on from a trading perspective with really anything going on. We do have some earnings. I mean, you've got Apple moving around some, big downgrade on PayPal, and then Trump saying something negative about Facebook's Libra. And by the way, am I the only one that can't say Libra without thinking about Miss Cleo saying, "You're a Libra, aren't you, darling?" Every time I hear it. We need to get that as a soundbite, Mark, on our thing. So every time we say Libra, Kyle can drop in, "You're a Libra, aren't you, darling?" from the old Miss Cleo, and that would be a lot of fun. But
I'm sure she's very loose in her licensing rights.
I'm not sure that single thing is going to matter. But yes. Anyway, it's been a bit of a snoozer.
Bit of a snoozer. I think the moral of the story is we're all wasting our time watching the markets and things like VIX because we should all just be playing freaking Fortnite. They had some giant tournament over the weekend. That's stealing all the thunder today. 16-year-old kid won $3 million. That's amazing. That's life-changing money at the age of 16. It's kind of a little bit terrifying. The largest prize, I've heard of big prizes for teams in the esport realm, but never, I think, for an individual. I think that's the biggest they've ever had, let alone for a 16-year-old winning that kind of money. It's kind of crazy. The oldest player in the tournament, by the way, in case you're curious, was about 24. He did all right. He won. I think he came in second. He won $1.8 million. Says great to be representing the old dudes at 24. He's already aged out at 24. And he said he wasn't sure what he was going to do with his money. He said, I might gamble it all the way or invest it. I'm not sure which yet. So, hey, I don't know his name here, but you should call Uncle Mike. Maybe he can help you out with that. So, yes, Fortnite apparently is where all the action is. If you're looking for index action, let's see what we got. I told you VIX already. SPY closing in on 1 million, not quite there yet. 840,000 coming into Showtime. ADV a little bit north of 2 million. SPX closing in on 500,000 contracts. ADV about 1.2 million. So pretty normal day out there as well. A little light. Q's about almost 300,000 on the tape. ADV about 560. And the old Russell Surprisingly quiet day, 120,000 for them, 300 for Russell's kind of been a surprising one of late, exceeding moves to the downside and then again to the upside, and just kind of in general being a bit of a weird and wild name. Let's see what's weird and wild out here in the realm of equity options today. Coming into Showtime, number 10, GE, about 80,000 on the tape. Amazon, number 9, 86,000. Number 8, Micron, 88,000. Again, a light day, listeners. Number 7, good old Netflix, 93,000. Number 6, Bank of America, 95,000 on the tape. Got to break 100,000. Got to go up. Number 5 for Facebook, $1.25 on the tape. Exceeded ever so slightly by Tesla, numero 4 here with 128,000. Number 3, the aforementioned Beyond. You guys can't get enough of Beyond, 135,000 on the tape as of Showtime. Number 2, AMD, yet again, $1.59 on the tape. Number 1 with a bullet, even on a quiet day here today, Apple taking back the top spot with a vengeance, 271,000 contracts on the tape coming into Showtime. Interestingly enough, that's a lot of puts in Apple today. 63% of that paper coming on the put side of the fence. That is the most biased paper in the top 10. Everything else is leaning to the call side. Facebook and Bank of America and Netflix at about 61% to the call side. Apple, the only thing leaning puts pretty heavy, which is kind of interesting. Speaking of interesting, let's see if we can find something interesting for you guys to sink your teeth into with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show we get a little weird, get a little wild, get a little whimsical. Let's kick things off. This name kind of encompasses at least 2 of the 3. I'll let you pick which 2. It's good old Bud, a.k.a. Anheuser-Busch InBev, coming into Showtime at a lofty triple digits here, 101.5, up about $1 and change, so kind of roaring right through the 100 level very recently here, up about a little over 1%. Today, let's look back and see how this bad boy, what it's been up to over the course of the past year. A year ago, this name was trading pretty much almost 30 cents shy of where it is right now. It was trading 101.27 a year ago. Then it proceeded to kind of just sell off all the way down. Let's see, got down to almost a little more than half of that here. It got down into the low 60s. That was, of course, right around the nadir for the market, which was Christmas Eve. And then it kind of just bounced right back. It's kind of, Anheuser-Busch, this chart is kind of like watching the markets in micro here, just only, I think, a little bit exacerbated. The sell-off was much worse towards the end of the year. The market obviously was doing well until about October when it turned. Anheuser-Busch started turning in July, so a little bit earlier. And then it bounced right back to where it is right now, back up pretty much to almost unched on the year, if not quite exactly unched on the year. So if you were buy and hold for a year in Bud, you kind of, you didn't do anything. But you watched it drift down and then come back up, interestingly enough. Let's see what's on our radar today. Oh, well, interestingly enough, a couple of things. Our Eye of Sauron first spotted a pretty big block. One of the bigger, not the biggest single equity block we have going up to the equity option block, was the Jan 90s going up for $14.35 on the offer. These were fairly tight for in-the-money calls, but again, that's pretty much stock at this point, right? So $14.05 at $14.35 was the market. These went up opening on the Philly for $14.35. Paper lifting that offer 15,000 times. And it's odd, it's size, it's odd. It's obviously pretty aggressively bullish. They want this thing to keep rallying. But as we did a little bit more digging, we realized that was not the end of the story. No, it's not the current end of the story, but it's not where the story begins. The story actually began a little while ago because these calls were actually, there's a roll going on today. If you dig a little bit farther, you see 15,000 SEP 70s also going up for about $32, $31.95 is pretty much right on the bid there for these bad boys as well. That one is closing. And surprise, surprise, well, it looks like closing. We never know for sure, but it certainly looks like a duck and quacks like a duck. And those SEPs, when we dig a little bit further, we realize those were opened back in March when the stock was $81.78. So back on March 4th, I believe it was, They came in to do the exact same trade they're doing right now. They did an in-the-money call. The options were, I think, around $13 to $14, $13.5 or so in that range. So picking up about a $14 call, which is pretty much exactly where they're playing again in terms of premium level. And it looks like it worked out pretty well. They gobbled up these calls. The stock ran, pretty much rebounded. Well, they had a little bit of a dark period there where we had the sell-off. But pretty much from when these went up in March, it's pretty much been all straight up ever since then. So these guys worked out pretty well. And they're deciding to take them off today for about $32. So put them on for 14, take them off for about 32. Not a bad little do, as they used to say there on the floor. And then deciding to keep the party alive, thinking Bud, even though Bud is pretty much unched on the year now, thinking that's going to be more action, and doing an in-the-money call to boot here, going in the 90s. Not, that's putting a lot of premium at work here. But hey, it's worked out so far, at least once. We didn't have a chance to go back much farther to see if he's been riding this bad boy for a while here. But at least since March, this guy has been using roughly in-the-money $14 calls, Mr. Meatball. And it's been working out so far, at least once. What do you think about this choice of liking the stock and then going into my little bit of the old stock substitution, and it seems to be working out?
Yeah, I mean, I think that's exactly what this is, and it's a nice, it just shows you that I'm always surprised that more people don't do this. It's such a smart way to substitute the stock, and it doesn't cost very much. Obviously, you have to worry about things like dividends and things like that, but I don't understand why this isn't used more often as a way of not having to spend that much to go along the stock.
Is this an approach you guys utilize at Carmen Line a lot?
No, but we almost never own stocks. We always recreate the index using options.
I guess it would be more of a future swapping in your case, but still the same.
Yeah, I mean that's almost exactly always what we're doing. We're swapping out actually owning the index, but with owning in the money calls as a way of recreating the index, and it is significantly cheaper and less margin intensive, and allows us to free up capital so that we can then engage in hedging when we feel like we need it.
Don't get hung up on the term stock substitution, listeners. It's pretty much underlying substitution, synthetic underlying, call it what you will. You want to get that exposure. This is one way to do it. Yeah, I would like to see more people doing this, because this kind of belies the old misperception that options are super risky, super risk additive, and indeed they can be risk mitigating. They could certainly free up a lot more capital for you to do what you want to do anyway, rather than tying up all the money to buy the stock. He's tying up a bit of money. Obviously, he's going in the money, but not as much as he would be 50% to be buying this on margin here. So a lot of advantages to taking this type of approach. Interesting stuff here. Let's move on to another. When you think Bud, next name, of course, you're going to think of is Equitrans Midstream Corp. This is a natural gas transmission company, hence the name Midstream here. Ticker symbol ETRN, ETRN. Let's see, trading today about $17.60, off about a dime. Not really a huge mover today from an underlying perspective, but doing a decent amount. On an otherwise quiet day, it comes up on our radar. This is the name that a year ago was trading 19.5, so about $2 north of where it is right now. And then it kind of gapped up to, had a decent run there up to right around early December, got up to about 23 and change. That was pretty much the high of the year. Then we all know what happened later in December. It sold off to not quite the low of the year, but pretty close, down about 18.5 again. And then it kind of bounced up to about 21 again. Then it sold off to the low of the year back in February, actually. Late February, about 17.32. That's when it hit its lows. And then it kind of has rebounded since then, back up to 22 again. A lot of peaks and valleys in this chart over the better part of the last year. We're in a valley right now, down very close to that 52-week low of 17.32. We're at about 17.58 right now. So an interesting time at the bottom of the 52-week range. Let's see what we had up here. Oh, it looks like some call love. The old school call love that was the SEP 20s for a quarter. These were a dime bid at 30 cents. They went up 7,485 times for a quarter. So right off the offer there, opening over there on ARCA on NYSE. Also worth noting that there are earnings, and the earnings are tomorrow. So this is a fairly in-your-face earnings play with a little bit of longer time horizon here as well, going up for a quarter. So interesting, Mr. Rock Lobster, kind of Rock Lobster, I apologize, Mr. Meatball. A little bit of a different approach to what we were just talking about. That was kind of a more, methodology, easy for me to say, systematic approach to using in-the-money calls to kind of replicate stock, and it's worked out pretty well on the long upswing. This is more of kind of our old school swinging at the fences here around earnings. What's your take on this one, sir?
Yeah, I mean, this is a significant bet on maybe some strong levels of natural gas and some strong earnings because, this isn't the most – I mean, this is a stock that'll move, actually. It's been as high as 22 and as low as kind of where it is. So they're making a bet on a recovery here and some sort of ability for the company to turn itself back around. It's a pretty significant bet that they're going to right the ship.
And we'll see how that plays out tomorrow. In fact, you know what we'll do? We'll put these in the to be watched category. Let's see how our friend fares here during earnings, because I think we'll know a lot of the answer to that story tomorrow. In which case, the way out to September may be moot at that point if we see it go back down. Well, it's pretty at the lows. If it goes below these lows, and those 20s probably aren't coming into play anytime soon. If we see a little bit of a run, those 20s may have a little bit of life to them. We shall see. And let's wrap it up here. You think BUD, then you go to ETRN. You got to wrap it up, of course, with ZGNX, right? That's that trifecta of names. That's the other one everyone puts in that category. ZGNX, of course, I don't need to tell you. Ticker symbol ZGNX. In case you're wondering, it's a pharma company. Go figure, the name like that. I love these descriptions. That's pretty much all it says. Pharmaceutical company. So there you go. I'll leave it up to your imagination what types of products they actually make, what pills and whatnot they actually do over there. Let's see. Trading today, ZGNX is a ticker, 48.5 even, up 4 cents. So not a huge underlying day out here either. Listed the name a year ago, was trading about 56.5. So a wee bit north, about $8 north of where it is right now. And then kind of proceeded to sell off down to about 43. And then in Christmas Eve, hit 34 and change, which is very close to its 52-week low of about 33.5. And then it pretty much turned right around again with the market. And within a few weeks, it was trading about 46, and then it got up again by the end of March to 55 again. So it got back up there again. And then looks like they had some bad earnings, as a biotech is wont to do. In fact, you can look at this chart and say, okay, this is the biotech. Looks just like it. It was trading from 55 and went in a week or so down to 39 again, and then it hit 36 in the span of a couple of weeks in mid-April. Apparently, market not liking what they're seeing on the earnings front. And then they kind of been languishing in that 36 to 40 range ever since, and they gap back up again. Oh, the old biotech's back up to 48 and change on the 28th of June. Apparently, a good earnings. So they giveth and they taketh away in the biotech sector, and now we're kind of floating at that 48.5 range where they kind of gapped up to after their last earnings. Let's see what we got here. This long sordid tale, how it's playing out in the options market today. Oh, it's call love. SEP. Actually, I take that back. Call activity, but maybe not call love. We've got the SEP doubles going up for 35 cents, 7,003 times. I love these interestingly sized blocks. Maybe they had someone sitting in the book they had to take out. Either way, the market was 25 cents at 70 when this trade went up, which is probably what you'd expect for some out-of-the-money calls in a little biotech that never really trades. And these things went up for 35 cents, so they got a dime off the bid. Not bad here. This is opening over there on the NAM, the NASDAQ options market. So looks like a little bit of the old upside overwrite, taking your 35 cents 7,000 times. There are earnings coming up again, so it's interesting. They must obviously biotechs have other things going on as well, and they have earnings on the 6th. Something just drove them pretty aggressively in late June. So end of June, June 26th, they popped pretty hard. And then now they have earnings on the 6th, so maybe some sort of FDA approval, something along those lines. Either way, they already had a big gap. We'll see if they can happen again in August. Either way, our friend here, probably an underlying holder, probably saying, hey, if I have to dump it pretty much a couple bucks shy of the 52-week high, maybe I'm not too upset about that. I'll take my 35 cents. Otherwise, Mr. Meatball, is that what you think is going on? You think something else is afoot here, sir, and these 7,000 SEP doubles for 35 cents?
I'm going to go out on a limb and say someone that knows what they're doing doesn't see any kind of major drug or trial stuff going out, and they're going for some premium harvesting here. I don't know what their drug schedule looks like, but a a lot of these drug schedules can be really confusing, really throw people off, and that's what turns one of these into a something that has potential to really to be a nice opportunity to harvest when maybe there's a bid on those that really shouldn't be there.
Yeah, maybe he's seeing a little bit of juice. Obviously, his earnings coming up soon. Maybe he's seeing some juice because of earnings and deciding earnings are not going to move it. It's whatever the next announcement is on the drug approval front, something along those lines. So deciding you're right, seeing a little bit of a bid, and he got a dime off the bid, so not bad. And deciding to take his 35 cents 7,003 times and run with it. All right, speaking of running, we're going to keep on running right on into the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it's that time. Earnings season expiration is every week, close to every day now. So these are two periods when they come together, when those Venn diagrams intersect, when you want to kind of know your P's and Q's about how your contracts work and things like selling options. I know you guys love them. Then you kind of forget about the other side, which is, of course, the exercise and assignment side and all the fun assignment risk that goes into these types of contracts. Mr. Last Emperor, sir, I'm guessing this time of year, this season, is when these calls start coming into the strategy desk hot and heavy. Am I correct there, sir?
They sure are. And I think that they have been, I would say, increasing in frequency. That probably has to do with the fact that more people, generally speaking, from the client base are starting to nimble in the options markets. So something that we face, quite a bit here on the desk. So I wanted to address it and wanted to ask some of the pros around the block as well of what they have been experiencing and feeling when they're speaking with their clients. But when we're discussing early assignment risk, we're really talking about or thinking about this risk from the side of your obligation in a contractual agreement. And that essentially means that we're thinking about it from the short side of the trade, right? When we have an obligation to buy the stock from the seller, when we're actually short puts, or we have the obligation to sell or sell short the stock to the buyer when we're short calls, right? Since the long call and the put holders, I guess, of American style options can exercise their right at any time, those of us who are short never really have the pseudo guarantee of not being assigned early. The contraparty controls the right. And they can do whatever they want, right? But there are ways to assess, I would say, the likelihood of, early assignment risk and maybe, making the necessary adjustments by, calling your broker, calling your fiduciary and figuring out what needs to be done. So I wanted to cover sort of the three rules of thumb that I generally go through in my thought process. Number one, a rule of thumb for me, while I'm assessing the early assignment risk, is you have to think from what's good for the contraparty. All right? So I mentioned we always think about this stuff from when we're short perspective. But you have to ask yourself a question, who is on the other side of this trade? Right? What's good for them is bad for you and vice versa. So the first rule of thumb for me is when an option that you're short is actually bidding less than intrinsic value. So this is the biggest one, I would say, from the perspective of liquidity and deep in the money options in general. So if the option that you're short is bidding less than intrinsic, what that means is the person who's long that option is not going to be able to trade out of it at fair value in the marketplace. So what are they most likely to do, right? If the option is bidding less than intrinsic value, that means that there's no time value left in that option. If you're short that option, right, you have sort of no edge left. You're basically long or short the stock, depending on whether you're short the put or short the call. So that is the type of the scenario where I would say, probably necessitates some sort of an action, and you are at much higher risk. Look at the option chain. Look at the depth of book on, in terms of the open interest, how many contracts are out there besides just your position, and start thinking about how the process of assignment works. So I'll explain how it works here at Fidelity. And we have a randomized process, and I know that that's not the case for all the broker-dealers out there. But for us, essentially the long call or put holder calls up their broker, exercise their right to buy or sell the stock. That broker contacts the Options Clearing Corporation. The Options Clearing Corporation then assigns a random broker who has a client with short contracts. And then that random broker goes through their own sort of tree process, right, of how are they picking the client who is actually going to be assigned. The idea there is that the larger the open interest, right, the lower the likelihood of you potentially being assigned early. So you kind of, you can't necessarily pinpoint the exact probability, but, the more open interest out there, the lower the likelihood. But nevertheless, this rule of thumb stands. If the bid is below intrinsic value, you're pretty much on the hook. And at that point, you have to really ask yourself, what is the strategy, right? What's your position looking like, because you are essentially short or long stock. Rule number 2, and this kind of goes to the eye of the Sauron point, right? Beware of the ex-dividend dates. So the ex-dividend date is the day when, you need to be aware, especially if you are short call options. The reason why is because a long call holder, by being long a call, does not benefit from the dividend payment on the payment date. So my rule of thumb is that if the time value in your short call option is less than the expected dividend amount, you are more than likely on the hook. Okay, and it most likely necessitates some sort of an adjustment, and you would be short stock and owing that dividend on the payment date through this ex-dividend date, right? So I have the Sauron, meaning know what you trade, beware of the regularly scheduled dividends that are announced, especially when it comes to ETFs that most of us have exposure to. Call your broker, your fiduciary. If we're thinking about some of the resources that are available out there, we can quickly look at the Bloomberg terminal, and Bloomberg does a good job of estimating the dividend amount for different types of ETFs. Examples are, your spiders or SPY or any of the spider family, your sector ETFs. Your IWMs, your QQQs, right? The most generally traded ETFs, you need to be aware where their ex-dividends are. And the companies are actually pretty tricky about not announcing the date in advance. So Bloomberg Terminal is a great place to go for an estimation as well as for the expected ex-dividend date. You need to be aware of that time frame. So again, short call options with time value that that is less than the expected dividend amount, right? Because the long call holder is most likely going to exercise in order to take advantage of that dividend payment at expiration. If they don't, the option value, just like the value of the stock, is going to be knocked down by the dividend amount the following day. And the third, I would say, be aware of the natural reaction of drying up options liquidity in adjusted option contracts. And that doesn't happen as often, I would say. So this is something, if it happens to you, you're definitely going to know that your contracts are adjusted and they start looking a little bit wonky. Remember that there's obviously no free lunch and on Wall Street, and the more complicated it becomes for long or short holder to figure out, how much time premium do I have left? How much time value is left? How much do I stand to make? Is it in the money? Is it out of the money? The more difficult it becomes to figure out of where you stand, the less liquid those underlyings are going to be, or I shouldn't say underlyings, but the options on those underlyings. So anytime an option or an underlying goes through an adjustment, you definitely need to kind of step aside and think, if I do still want to maintain the position, should I make an adjustment into the sort of the unadjusted side of the contracts, get out of the ones that you have. The longer you wait, and especially the deeper in the money they go, everything just gets exacerbated, right? Everything that I've spoken about in rule number 1 and rule number 2 just gets worse with rule number 3. So that's something to be aware of. Market makers are aware of that. They don't want to engage necessarily in adjusted option contracts. They widen out the spreads, so it just becomes tougher. Be aware that the contraparty is going to be in a similar situation. They can't get out of the option without a whole lot of slippage because of wide spreads, and they're most likely going to exercise early before they expire. That pretty much sums it up for me. I did want to mention, when you talked about the $3 million winning, kind of made me think about, I aspired to some of the world tennis greats when I was growing up, and I know that Wimbledon just finished up. I probably watched one of the best finals that I've ever seen, Djokovic against Federer, and I think that the winner was £2.35 million, which it is a little bit shy of $3 million.
See, why should you train tennis all your life when you could get those twitch reflexes up? See, you focused in the wrong area, sir. Clearly,
exactly. You're winning the oldest and the most prestigious tennis tournament in the world, and you get paid less than winning the Fortnite one. So exactly,
16-year-old kid winning.
Priorities change.
Winning more than that. But well done, sir, for holding down the court and all the fun nuances therein around exercise and assignment. By the way, I'm not sure you know this, Konstantin, but when you sell premium, there's no other nuances to it. It's just free money. Isn't that what you guys tell them when they call up the strategy desk and ask questions? It's just free money in your account all day long. Let it rain. Is that what you tell them to do? Let it rain?
Let it rain. No, we definitely always are on the side of caution. We always try to point out to people that someone is always taking the other side of your trade. If you figured out a free way to make money, who in the world would take that other side? You have to look yourself in the mirror and understand, right, that there's no free lunch. So make sure that you're assessing the situation from the realistic standpoint of view. If you found something that looks a little bit off, chances are, right, it most likely is. So if you're unsure, if you're in a situation where you're not 100% clear, before you click some sort of an adjustment button, trade button, give your broker a call, your fiduciary a call. We'll take a look at it together and make sure that we help you out. I would also say that at Fidelity, and I'm not sure how it is at other broker-dealers, but with us, we don't allow, kind of exercising early online for that specific reason. So
I was going to ask you that. You mentioned calling up. I was going to ask you if that's the case. You have to proactively contact you guys in order to make the early exercise happen.
Absolutely. So obviously, at expiration, into expiration, it's 1 penny or more in the money on the long side automatically takes place. But if you want to exercise early, you do have to give Fidelity a call, and obviously a licensed broker would take a look at the situation with a kind of sober view and figure out if it makes more sense to sell the option in the open market at the time. So That's one caveat here.
I like that. Make them talk him off the ledge a little bit when they call the strategy desk. Speaking of talking off the ledge, that's kind of what Uncle Mike does on a daily basis when he's not sitting here talking to us. He's talking to his clients. He's saying, calm down, relax, let's roll some puts. Uncle Mike, this time of year, this time of season, things are hot and heavy from an expiration, from an assignment perspective. Is this an issue you encounter with the clients a lot these days? You have to kind of walk them through some of those scenarios that the last emperor just outlined over there in St. Charles Wealth, sir?
Not too often. I mean, with mostly on the managed money side. I mean, I hate being assigned personally if I can help it. Even if I have the money to cover it. Number one, I never trade from a leverage standpoint with short options, but sometimes when you get assigned, you really need to have the mentality, or I do, of after having almost 20 years of doing this, is that it's not a bad thing. It's just sometimes it can be a little bit. It's a minor hassle. And so what I mean by that is that let's say that I'm in a vertical spread and I get assigned early on something for whatever reason. You just got to close it out and just redo it a lot of times. And most of the time I'll be honest with you, I can't even remember the last time I was assigned on anything, but with the exception of selling a put to get into a stock. I mean, I'm not talking about that, of course, but most of the time with assignments, you just need to deal with it. And so with the advent of same-day substitution, meaning that let's say you get assigned on something, but you still have the long option to cover it in case it were to go down, and brokers often will allow you to just close the position out the same day, no harm, no foul from the standpoint of margin. So I think just having a good awareness, the last emperor really described it very well. I don't have too much to add to it, but just have the understanding that it's a minor hassle. It's not something that is to be very alarmed about. I'll never forget one of the first time I ever got assigned many years ago. I woke up in the morning and I saw $50,000 in my account in parentheses, and I was very scared. This was my personal account, and I'm like, what on earth is going on here? But once I calmed down and got over the shock of seeing that, it really wasn't that big a deal, and everything was all cleared up by 9 o'clock Chicago time. So call up whoever you have to call up with your Fidelity broker and or whoever you're working with, and make sure that we have an understanding of it. But once you have an understanding of it, it's a minor inconvenience. It's not a major problem.
And time for us to have an understanding of what's coming up. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we do that. We go around the block, tell you what we're watching for the rest of this week. A lot of earnings. Of course, we have the Fed on the docket this week, but a lot of earnings on the micro front as well. We kind of touched on a few of them earlier in the show. Beyond Meat, the big one, coming up after the bell today. Right now, the stock 220.5, roughly off 14.5 or 6.25%. This name is it's just it's the new Tesla. It's up and down, just multiple percents every given day. It's amazing out there. Tomorrow, a name that's a little more staid by comparison, at least. The former Uncle Mike big holding of Apple popping off after the bell, as well as EA and Sony. By the way, let's check in on the earnings move reports here. You can find the Beyond one. I don't have it in front of me. It should be on the website here, but I do have Apple here in front of me. And when I pull that up, there it is. Then you could see that coming into the time of this report, the stock was at about 207. Let's see where they are right now. Apple right now coming at the end of the show at 210.25, up 2.5. So a little bit higher than where this report was pricing in. And they were pricing in about 5%, 4.9%. They kind of changed their move reports a little bit. They kind of just quote them now in terms of the percent earned move priced in, so the percent of vol there, whereas before it was just kind of the raw straddle numbers. Now it's just kind of vol percentages, maybe a little bit more intuitive for you guys. And that's pretty much in line with what Apple has been pricing in the past. They've moved about 4.6%, and now they're pricing in about 4.9%. So not a huge premium out there. We shall see how Apple fares tomorrow. Actually, we got GE and CME on Wednesday, GM and Pinterest on Thursday. Friday, we got Exxon and Chevron. Other names, Qualcomm on Wednesdays. A lot of names popping off. Etsy after the bell, and Square on Thursday. A lot of big names popping off here. Pfizer before the open on Tuesday. So kind of pick Grubhub before the bell. Kind of pick your poison. Whatever sector of the market you're interested in, there's something popping off out there for you. And let's go back around the horn. Since we're kind of coming up against it, we're going to do a combo around the block. And what the heck do you have going on here segment as well? Let's start off. Let's see. All right, there's the music. That makes it appropriate now. Let's start off in the land of the meatball. Mr. Meatball, sir, first off, what are you watching for the rest of this week? And then secondly, what is going on in the land of the pit? If folks are intrigued, they want to maybe learn more, they want to reach out to you, where should they go? What should they do? What can they find there?
Well, we've got the Federal Reserve coming up. We have Apple has earnings this week, which I think will be interesting. And, I think those are the two big things. The rest of earnings. And, I've been doing my morning thought of the day on YouTube Live. So if you're not following at Option Pit on YouTube Live, you're missing out on something.
Uh-oh. Those are kind of like the Jack Handy deep thoughts? Is that where we're getting there?
Even better.
Even better. And you're kind of breaking up a little bit, so I will save you the last part. Head on over to optionpit.com, of course, is the place to go to get all those good nuggets and the webinars. And give a follow on the old YouTubes, Option Pit Live. Sounds fascinating, maybe a little bit disturbing. Maybe not for the kids, not clean. You never know. Head on over. Find out for yourself. Option Pit on the old YouTubes. And you, too, can see what Mark's deep thoughts are on a daily basis. A little scary, but hey, that's what you're asking for when you're heading over there. Uncle Mike, sir, are you doing any deep thoughts on YouTube? And what are you watching for the rest of this week, sir?
Well, I think the main thing we're watching is earnings, of course. And the other thing to keep in mind, as well as the Fed, but the other thing to just keep an eye on is the S&P at 3,000. When we were at 2,000, we stayed there for a while, folks, and we've been at 3,000 and haven't really had a lot of movement one way or another. So waiting to see if we can get a distinct move to the upside or the downside. But these earnings and this Fed and this trade war and this Twitter account definitely could be the movers.
Yeah, tweeting some interesting stuff today. So all sorts of things afoot over there on Twitter. I have to learn to kind of keep that tab away from me during the showtime because it is too distracting as the show is going on. What's trending now? What's going on? What's happening? What crazy thing is going on? It's terrifying sometimes, listeners. Instead of being terrified, you should go learn. Maybe trade a little bit. And maybe fidelitys.com/options is the place they want to go. Mr. Last Emperor, if they head over there to fidelity.com/options, what could they find? Or maybe perhaps if they want to reach out to you guys, how should they do it? And also, while you're at it, what are you watching for the rest of the week, sir?
Yeah, fidelity.com/options, fidelity.com/coaching. If you are already a Fidelity customer, of course, don't hesitate. Give your regular service client line a call and request an appointment with us. You can ask us for us by name. We'll gladly reach out. It'll be a pleasure to chat with you. And, of course, you're always welcome to our daily coaching sessions that we do here as well. What we're watching, of course, guys mentioned it already. I think Apple being the heavy hitter is going next. That's going to be on deck. And what I'm actually looking at is a little bit of a divergence in different indices. Wanted to see if that continues into the end of the week post-Fed, that being NASDAQ, S&P, and the Russell 2000.
That fidelity.com/coaching. We always talk fidelity.com/options. That's a place everybody likes to go. But is that I never heard that one before. Have you guys been on the show all this time? Is that a new URL or is that one I just never heard before somehow?
Heard about it. It's definitely been up. That's primarily where we put on the daily kind of screen share video classes, talk about a variety of topics on a daily basis. So it's definitely been around for a bit. That's where we spend a decent amount of our day.
Guys over here burying this secret URL I've never even heard of before. All you guys, you and Trey and Brian and everybody, Colin coming on, never even heard of this one before. There you go. So fidelity.com/options is the place to go if you want to become a client and kick the tires and light the fires on all these cool things. And once you've done that, if you have questions, you want to hit up the Last Emperor or Trey or Colin or any of those guys, fidelity.com/coaching. That's a good place to go to do all that stuff. And on behalf of the Last Emperor and Uncle Mike and the Meatball and myself, I thank all of you out there for downloading, streaming, subscribing, for listening live. If you are listening live, take a break, relax. We'll be back in about 55 minutes with a little bit of the old crypto rundown. A lot of fun stuff happening out there. Got a great guest to help me go through all that, so stay tuned for that in a little bit. Otherwise, we'll see you back here tomorrow for the advisor's option. Wednesday, you're going to get some good OPR. In between there, you're going to get hit with my conversation with the crypto mom herself from the SEC, Commissioner Peirce there, talking about all things crypto. And we'll be back again for this show live on Thursday with the option block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.